What's happening, Bitcoiners? Welcome back to the Bitcoin Bulletin, your go-to source for everything crypto. First up, we're diving deep into the charts because Bitcoin is showing some seriously bullish signals. Analysts are spotting an inverse head and shoulder pattern, and with those Fed rate cuts on the horizon, this could be massive. Next, a seismic shift is happening in the network itself. Bitcoin Knots, a challenger to Bitcoin Core, has exploded in popularity, grabbing a massive 25% of the public node share in mere days. This rapid surge is sparking intense debates about the future of Bitcoin's governance and data handling. And the optimism is building for Uptober. With the Federal Reserve's FOMC meeting behind us, analysts are predicting a major rally for Bitcoin, regardless of the exact rate decision. We'll break down why seasonal trends and market sentiment are pointing towards significant gains ahead. Finally, we're dissecting Fed Chair Jerome Powell's latest remarks following the FOMC meeting. What do his comments on the economy and potential future rate cuts mean for Bitcoin's trajectory? All this and more, right here on Bitcoin Bulletin. Make sure you're subscribed and have that notification bell on so you never miss an update. Bitcoin's chart is flashing bullish signals. Get ready, because Bitcoin's chart is looking more bullish than ever. Analysts are buzzing about the formation of an inverse head and shoulder pattern, a classic indicator that often precedes significant price increases. This technical setup, combined with the anticipation of upcoming Federal Reserve rate cuts, is creating a perfect storm for a potential rally. This inverse head and shoulder pattern suggests that Bitcoin is building a strong foundation for upward momentum. Typically, this pattern involves three troughs, with the middle one being the deepest, flanked by two shallower ones, and is seen as a reversal pattern from a downtrend to an uptrend. The confirmation of this pattern, especially alongside positive macroeconomic indicators, could signal a major shift in market sentiment. The Federal Reserve's stance on interest rates is a critical factor. With indications that rate cuts are on the way, this typically leads to increased liquidity in the financial markets, making riskier assets like Bitcoin more attractive to investors. The prospect of lower borrowing costs globally can fuel investment in assets that offer higher potential returns, and Bitcoin is often at the forefront of such flows. The community is abuzz with excitement, with many traders and analysts sharing their bullish outlooks on social media. The convergence of a strong technical pattern and a favorable monetary policy environment has many anticipating a significant price surge in the near future. The question on everyone's mind is, how high could Bitcoin climb as these factors play out? Don't go anywhere, because the market's reaction to these signals is just the beginning. Next, we'll uncover a surprising shift in the very fabric of the Bitcoin network and explore the implications of Bitcoin Knots' explosive growth. Bitcoin Knots takes the network by storm. A dramatic shift is underway within the Bitcoin network, and it's all thanks to Bitcoin Knots. This alternative client has seen an astonishing surge, rocketing to claim nearly 25% of the public node share in just a matter of days. This represents a staggering 47% increase, leaving the dominant Bitcoin Core's growth in the dust. This rapid adoption comes at a pivotal moment, as Bitcoin Core developers prepare to remove the long-standing 80-byte limit on OP_RETURN data in their upcoming version 30. OP_RETURN is a feature that allows users to embed arbitrary data within Bitcoin transactions, a capability used for various purposes, including digital art and document records. Bitcoin Knots, however, champions a stricter 42-byte limit, which its creator, developer Luke Dasher, argues is crucial for curtailing spam transactions and maintaining the blockchain's integrity and low fees. Dasher has vocally warned of the consequences, questioning what will happen now that Core is perceived as opening the floodgates to spam. He stressed the importance of community responsibility, stating that any chance of making Bitcoin a success will be lost unless the community takes a clear stand against this change. Supporters of Knots believe that maintaining stricter data limits is essential for keeping the blockchain lean, fees low, and the network focused on its primary function as a monetary system. On the other side, Core developers and their advocates argue that any transaction meeting the fee requirements should be included, regardless of its data content. Jameson Lopp, a proponent of core, has expressed disdain for imposing governance models, stating, "If you don't like anarchy, you're free to leave." The growing divergence in policies between core and knots, while currently compatible, is raising concerns about potential chain splits if their approaches continue to diverge. This surge in knots adoption underscores a growing demand for alternatives to Bitcoin Core and highlights a larger, ongoing debate within the Bitcoin community about decentralization, potential fragmentation, and network governance. But the network's future isn't the only thing generating buzz. Get ready for some major market predictions. Next, we're diving into why analysts are forecasting an Uptober rally for Bitcoin, even as the Fed makes its latest move. Uptober rally incoming, analyst forecasts Bitcoin surge. As September draws to a close, the crypto markets are buzzing with anticipation, and one analyst is predicting a strong Uptober rally for Bitcoin, irrespective of the Federal Reserve's latest FOMC decision. Bitcoin has been holding steady above key levels, trading around $116,236, showing resilience as the market awaits policy signals. According to Dean Crypto Trades, Bitcoin's price action shows it's only about 7% above its post-election local peak, significantly less than the S&P 500's 9% rise and gold's impressive 36% surge in the same period. This compression suggests Bitcoin might be poised for a more significant upward move, potentially even forming a lower high before extending its gains. The sentiment is that Ether could follow suit once it breaks the $5,000 mark and enters uncharted price territory. Lark Davis highlighted a compelling historical pattern, noting that every September FOMC meeting decision since 2020, excluding the 2022 bear market, has historically preceded a strong Bitcoin rally. This pattern appears less about the Fed's specific rate choices and more about seasonal market dynamics, with Bitcoin historically performing exceptionally well in the lead-up to and throughout October. Technical analysis from Bitcoin Bulletin research shows Bitcoin rising approximately 0.9% during the recent analysis window, moving from $115,461 to $116,520, with a session high near $117,317. This period has confirmed the $116,400 range as short-term support. The consolidation observed over the past few sessions, following a climb from late August lows near $108,000 to recent highs above $117,000, suggests the market is pausing before its next significant move upward. This optimistic outlook is fueling excitement across the crypto community, with many looking to October as a crucial month for Bitcoin's price performance. The combination of technical patterns, seasonal trends, and market anticipation is creating a bullish narrative. But what does the Fed's official word mean for Bitcoin's path forward? Stay tuned as we break down Fed Chair Powell's latest statements and their direct impact on Bitcoin's future price action. Powell's Fed remarks, what they mean for Bitcoin's next move. Despite the Federal Reserve's decision to cut interest rates and Fed Chair Jerome Powell's subsequent commentary, Bitcoin remained largely unfazed in the immediate aftermath. However, analysts are expressing a broadly optimistic outlook for the remainder of the year, anticipating that the asset's price is poised for further gains. Powell's emphasis on a weakening employment market and broader economic concerns suggests a likelihood of additional rate cuts. This dovish stance is seen as a positive catalyst for Bitcoin and other cryptocurrencies, with analysts also pointing to the steady growth of crypto treasuries as another supportive factor. Ira Auerbach, former head of digital assets at Nasdaq, noted that Powell framed the rate cut as a risk management cut and indicated a data-dependent path toward future reductions, suggesting that easier financial conditions ahead should benefit the crypto ecosystem. The Fed lowered the federal funds rate to a range between 4.25% and 4.5%, marking the first cut of the year. This move came after months of pressure and followed a significant downward adjustment in job creation numbers. Powell acknowledged the challenging economic landscape, balancing the dual mandate of price stability and maximum employment, noting that downside risks to employment have increased. While Bitcoin traded near $117,000 shortly after the announcement, largely flat over the preceding 24 hours as the market had already priced in the cut, prices have since seen a slight cooling. Both stock markets, like the Nasdaq and S&P 500, also showed muted reactions, having rallied in anticipation of the Fed's decision. Jerry O'Shea, head of global market research at Hashdex, observed Bitcoin's muted response, but highlighted that other factors could help drive Bitcoin higher in the coming weeks, including continued demand from corporate treasuries and ETFs. He believes these factors, coupled with market confidence in further cuts, could propel Bitcoin to new all-time highs. Projections indicate the interest rate could fall to 3.6% by year's end, with further declines anticipated in subsequent years. Stéphane Ouellet, CEO of FR&T Financial, predicts a fiat devaluation cycle the likes of which hasn't been seen since 2021, positioning Bitcoin as a clear hedge against this devaluation as interest rate cuts continue. That's all the top news for today, but we're not done yet. Get ready for a rapid-fire recap of today's biggest stories and our full call to action. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin forming a bullish inverse head-and-shoulder pattern with Fed rate cuts on the way. Bitcoin knots making a massive 25% node share surge, analysts predicting an Uptober rally regardless of the FOMC decision, and Fed Chair Powell's remarks signaling more cuts ahead. Don't miss out on any of the action. Like this video, subscribe to Bitcoin Bulletin, hit that notification bell, share your thoughts in the comments, and follow us on all social media platforms for real-time updates.